Hi, I'm Nigel Fisackley. I'm here today with Gary, our mortgage expert, and we're here today to discuss one of the biggest things which is important to a buy-to-let investor, which is a person's credit score. And the reason why it's important is obviously to generate a portfolio, you need to raise debt, and usually you do that through a mortgage. And so to do that also, you need a good credit score. So Gary, what I'm going to firstly ask you is one of the most important questions, which is how do you build your credit score?
Yeah, Nigel, by first and foremost, by paying all your accounts on time, bringing any outstanding payments, what you might have, up to date. That's any credit card, loans, any defaults, any county court judgments, make sure they're up to date. Anything like defaults or county court judgments, try and get them satisfied and settled as early as possible. Limit your credit limits, any new credit limit requests. What we see, Nigel, is clients basically thinking, oh, I'll apply for this credit card, I'll apply for this loan because it'll boost my credit report. And it doesn't, basically, because the lenders do not like you asking for lots of credit facility at the same time. Ensure all your details are correct and accurate. That's sort of your name, your voter role, etc. Make sure there's no disputes with any credit agencies. So if you've got any missed payments or you think you've got a county court judgment or a default and it's not your fault, make sure that it's basically up to date and accurate. And close any unused credit facilities, accounts that you have. If you've got credit cards, Nigel, and they've got a facility of £1,000 or £10,000 and you never use them, close them down. It shows a provider that you're actually managing your money very well and you don't need access to this credit facility.
Well, that's really interesting, actually, that you shouldn't just have lots of open credit facilities, because one of the big things when it comes to expanding your portfolio is having access to credit. We've all got a limited amount of funds, so actually having the cleanest credit record you possibly can is incredibly important. But I suppose the converse part of that question actually is looking at things if you've got a bad credit score. So what are the type of things which could affect your credit score, Gary, which you need to be aware of, which may cause you problems?
Yeah, so again, late payments, Nigel, make sure you pay everything on time. Even if it's a day, 2 days late, this kind of a knock-on effect with your credit score and on the credit files. The number of consecutive missed and late payments that people have, sometimes people just get in a habit that either too busy with their lives or they haven't set up direct debit standing orders for any credit cards that they may have, making minimum payments. And it's easy just to forget to make that payment on time. Then all of a sudden it goes into the next month and you've done the missed payment again. You've caught up on that one. And it just knocks your credit report. Nearing credit limits, we see this constantly. Somebody's got access to £10,000 credit facility. Great, let's spend that money. Let's have £9,800 of that spent on a credit card. The lenders do not want to see that, Nigel, because it looks like you're not managing your money, you've maximised your facility. So try and keep your limits to as low as possible. The length of time that you've had credit accounts opened, and again, applying for multiple credit accounts within a short period of time. Big no-no, cash advances on credit cards. I know a lot of people have been affected with furlough, losing their jobs, losing income, and etc. And sometimes they need a little bit of cash, and they go to the cash machines and they just think, well, we'll just take out £50 or £100 on the credit card. One, you're going to get charged the premium for doing this, but also when you're applying for a mortgage, the lender sees this on the bank statement and they're thinking this client cannot manage their money correctly. Defaults, county court judgments, bankruptcies, IVAs, debt management plans, payday loans. The amount of times we see clients who have not had any credit and the friend down the pub is when take a payday loan, get your credit up, and they'll take a £25 payday loan or £50 payday loan because they've listened to the guy in the pub or the girl in the pub. It's a load of rubbish. Do not touch payday loans. Lenders just do not like them. And you've got to be clear with payday loan for at least 12 months, 24 months with a sort of normal lender. And last but least, having actually no credit can actually affect your credit score, Nigel. So especially the young people out there just finishing university or just getting their first jobs. starting to save up. They're thinking, I don't want to get any credit, I'm going to apply for a mortgage. And because they've got no credit history, then this can have a detrimental effect on the sort of applying for a mortgage, because the lenders cannot access their data and their payment history if they've made any because they've got no sort of history of making payments. So that can affect the credit score as well, Nigel.
Yeah, yeah, that's really interesting. I mean, and to be honest, it's really easy to get a blip on your credit file, because I mean, one of the big things as a landlord, which I know it hasn't affected me, but it could quite easily affect a landlord, is when a tenant moves out and they change over the gas and electricity to yourself, because you're the owner of the property, or the council tax, and essentially because you don't collect the mail, or you don't see the mail, or you don't see the correspondence, and then the council try to contact you via the land registry, which is in a property you no longer live in. It's dead easy to get a debt accrued on your name without you actually ever knowing about it, which if you get a county court judgment because of that, then obviously that has an effect on your credit file. So I suppose the question I've got really is, if that does happen, or you have got a blip, or you've got a blip which you didn't really mean to get, can you still get a mortgage with a low credit score, Gary?
Yeah, so basically, again, your product, if you apply to a lender, say we're talking just in general terms, if you've got any sort of blips like that, Nigel, then as a general rule, you're going to have to probably be charged a higher interest rate from the lender. A lot of times we'll have to go to a specialist lender, because a lot of your high street do not want to touch things, depending on the severity of the blips that you've got. But a lot of times you'll go to a specialist lender, and you'll need to put a bigger deposit down. So I know we've talked in the past about 95% deals, 90% deals on the residential side, but if you've got blips in a low credit score, then 9 out of 10 times you're not going to actually fit the criteria and get one of these mortgages. So general rule, specialist lender, you're going to have to pay a higher interest rate, and you're going to have to put a bigger deposit basically down if you've got a sort of low credit score. And really what lenders are looking for, Nigel, is to try and have at least 24 months clear of any blips within your credit. So even if you've got some credit mistakes and you've got defaults or you've got missed payments, it's still great to talk to a broker, get the credit report, and let the broker just work with yourself and just say, look, this is what you've got now. However, in X amount of months, if we do this and do that, we can correct it and we can get you a mortgage.
Oh, yeah. Well, that's, I mean, it shows you the importance of keeping an eye on these things, really, because I mean, if it's going to cost you more, or it's going to require a higher deposit, then it's incredibly important just to make sure you're on top of your credit file, especially if you're coming into a period of your life when you want to raise some debt. I mean, in terms of obviously that was discussing residential mortgage. In terms of buy-to-let mortgages, is it a total no-no? Can you not get a mortgage if you've got some blips on your credit file, or is there still lenders out there within the buy-to-let sector?
Yeah, so the buy-to-let sector isn't as strict as the residential. So some lenders will allow you to proceed with the buy-to-let mortgage if you've had no defaults or CCJs within the last 6 to 12 months. Whereas, again, going to your high street lender for residential, generally speaking, is 3 to 6 years. Now, again, the loan to value will be dependent on your credit score and actually how many blips you've got. But as a general rule, we know that you've got to be putting 25% in minimum to get the majority of the lenders out there for buy-to-let. But again, you're still going to have to meet the minimum lending criteria. So some lenders will ask for minimum income, some will ask for minimum property valuation, and some will ask for what was I going to say, minimum income, minimum property
valuation,
and minimum deposit as well, Nigel. Yeah.
Oh, yeah.
So, and they may have limits. So some lenders, you know, when we're talking about there, just saying maybe a utility bill because you're an existing landlord, you've had a changeover from like your property, the tenants moved out, it's been 3 or 4 weeks for you or whatever, you haven't picked up the post, you haven't put your meter readings in, for instance, then a few months down the line, the utility company is basically chasing you for a missed couple of payments and everything. Some lenders will ignore if it's a utility missed payment, Nigel. Some lenders will ignore if it's an example of a CCG and it's up to £2,500. This is for sort of buy to lets or defaults. And again, sort of telecom, like small communications, they'll sometimes ignore them if they're under £300, £500. So you've got more access to specialist lenders on the buy to let, and it's not as strict to get a mortgage with defaults and county court judgments as it is with residential. And as long as you're 24 months clear, then we have got options for yourself.
Oh, brilliant. Well, that's really good to hear. So you're not totally buggered if you do miss something. And I suppose the final question I've got is, it's really annoying to get a blip on your credit file. Sometimes, like you say, it could have been from no fault of your own. So have you got any tips or tricks to help people improve their credit score, apart from obviously the time related where stuff drops off? But have you got any tips or tricks which may help you?
First and foremost, prove where you live by registering on the electoral roll at your current address. This is a big one that we see regular with people. They've either moved into the property, they're renting, and they just do not register with electoral roll. They just think, oh, I'm just going to be here 6 months or so. Register with electoral roll, just so then the lender can prove exactly where you live and who you are. Build up your credit history. So for an example, which we just talked about, the younger generation who are trying to get on the property ladder, if you've got no credit, then maybe get a credit card, pay your petrol, pay a night out or something, and make sure that you pay it at the end of the month. So you're just building up a bit of credit history and showing that you can manage your money and that you can actually basically, you're taking accountability for your actual taking out some credit and paying it on time, making your payments on time, and make sure they're paid in full each month as well, Nigel. If your minimum payment's £50, don't pay £40, pay £50 or pay £60 or overpay. And keep your sort of credit utilization low. And what I mean by that is, if you've got a £5,000 credit limit on a credit card, don't max it out, keep it low, so the lenders can see you've got a credit facility, but you're managing it within its limits and you're being totally responsible. And set things up direct debit. If you've got credit facilities, set up a direct debit for minimum payments, so then basically you don't get any missed payments or blips on your credit file.
Yeah, well, it's incredibly interesting, because ultimately we're in the game of like generating wealth for ourselves through property, and you've got to treat it like a business, and a business needs a plan, and a business needs a plan to make that money. So by creating some of these credit files or improving your credit file and a plan to improve your credit file, ultimately what that'll help you to do is achieve your goals by raising more debt and buying more property. So it's definitely something which we all need to be aware of. So thank you so much for that, Gary. And like I say, always, if anybody needs any mortgage advice from Gary, he's always available. If you send us an email to landlords@nguhomelettings.com, we'll get back to you and we'll send on that referral to Gary. So yeah, Gary, thank you so much.